Hello and welcome to Westpac's Davidson Institute. This video is from the Buying Your First Home series and is on the Super Saver Scheme. So what is the First Home Super Saver Scheme? The First Home Super Saver Scheme was introduced by the Australian Government in 2017 as part of a number of initiatives to reduce pressure on housing affordability. Basically, it allows you to save for a home deposit in the concessionally taxed superannuation environment. Essentially, you make additional voluntary contributions to your superannuation that you later request the tax office to release. The contributions may be concessional or non-concessional, but don't include employer super guarantee contributions. You can make contributions up to $15,000 per financial year, but the maximum amount you can withdraw is $30,000 of contributions plus the earnings on those contributions. When the money is released, it is counted as part of your taxable income for that year. The ATO will withhold tax at your anticipated marginal tax rate, but then apply a 30% offset. There's no time limit to when you can request release of monies. However, to be eligible, you must be at least 18 years of age, never owned property before, and never requested a release of super funds before. This is a once-only opportunity. Also, you must enter into a contract to purchase or build a principal place of residence within 12 months of release of the funds. A word of caution here though, be sure you request the release prior to signing a contract. Once you've signed that contract, then you are deemed to be the beneficial owner of the property, and as such, become ineligible under the never owned property criteria. So what's the advantage of using the Super Saver Scheme as opposed to simply saving your deposit in a savings account? Well, the answer is that your savings can build more quickly as they're taxed at the super rate of 15% instead of your marginal tax rate. Remember though that once your contributions go into your super, the only way they can be released is via this scheme or when you retire. You can find out more information on the Australian Tax Office website, and I thoroughly recommend getting advice from your financial planner prior to making the additional voluntary contributions to your super. Thank you for viewing this video on Super Saver Scheme. We recommend you continue your learning journey with the next video in this series, First Homeowner Grants. And we wish you every success with buying your first home.